This is Piyush from the Investor Relations team in Bangalore. I welcome you all to the Britannia earnings call to discuss the Q4 17-18 financial results. Joining us today on this earnings call is our Managing Director, Mr. Varun Berry, CFO, Mr. N. Venkatraman, VP Sales, Mr. Gunjan Shah, VP Marketing, Mr. Ali Harris, GM Procurement, Mr. Manoj Balgi, Vice President Dairy Business, Mr. Venkat Shankar, and Vice President Adjacent Bakery, Mr. Jayant Kapre. We will start the call with remarks on performance by Mr. Varun Berry. Subsequently, we will open up the call for questions. Before I pass it on to Mr. Varun Berry, I would like to remind you that anything which we say that refers to our outlook for the future is a forward-looking statement which must be read in conjunction with the risks and uncertainties that the company could face in the form of general economic conditions, commodities and currency fluctuations, competitive product and pricing pressures, industrial relations and regulatory developments. I would now like to pass it on to Mr. Varun Berry for his comments.
Hello everybody, good afternoon. So let me just move to the presentation. So if you get to page 3, it started off to be a fairly tough year for us, but in the end, I think we've gotten to a stage where we feel that the momentum is again back in the categories that we operate in. Again, a bit of repetition, but something that we are really proud of is the consistency of our results. And that really keeps the entire team fairly motivated. So if you go to page 5, you will see that from 12-13 onwards, our CAGR on top line has been 11%, and our CAGR as far as the profit after tax is concerned has been 31%. And that's consistently been showing up every year. So very happy with the way things are turning out. And just from there's something that which most of you might not be aware of. The fact is that in March of this year we've completed 100 years as a corporate. While as a business it's longer, but this company, which is Britannia Industries, came into being exactly 100 years back. And as we celebrate 100 years, we've reached a few milestones. Total income of 10,000 plus crores, profit before tax of 1,500 crores, and profit after tax of 1,000 crores. So a lot of zeros out there. So feels good about that. We are looking forward to celebrating 100 years, towards August, and all of you will certainly be a part of that celebration. Now moving on to the next page, which talks about the execution parameters that we've been focusing on. And truly, what we've achieved is a result of the execution focus that the team has. So premiumization and innovation, as we stated earlier as well, is certainly one of the key parameters as far as we are concerned. And this, I think, has been working very well for us. But let me tell you, this year, the financial year that we are in, is going to be a benchmark year for us as far as innovation and premiumization is concerned. Because the pipeline is the widest compared to any other year that we've had in the past. So, watch out for this space. Second is distribution footprint. We made great progress on distribution. And frankly, this was the first year where every month we gained numeric distribution versus the previous month. So month on month, we kept gaining numeric distribution and also direct distribution. So we are getting close to about 19 lakh direct outlets that we get to. Cost leadership, it's become a part of our DNA to make sure that we keep our costs low and keep finding opportunities to reduce costs. And also leveraging our fixed costs, we certainly want our fixed costs to grow, at a lower rate than our top line. Just going to the 5 that I'd outlined. So delightful innovations. Clearly, we've recently launched the Milk Bikis Good Morning, which is doing quite well. We've also launched the NutriChoice Oats and Chocolate and Almond, which is also doing very well. In the cracker area, we've launched 50/50 Jeera, which initially is giving us very good results. And we are revamping our value Tiger Cookie portfolio, which also in the first 3 months of launch is looking good. The second is on distribution. I've already spoken about direct distribution getting close to 19 lakh outlets. Rural continues to be high double digits, and it's growing month on month for us. This is giving us very good dividends and also fulfilling a weakness that we had as far as our portfolio was concerned, as far as our geographical spread was concerned. We certainly have, rural now moving closer to our urban distribution and share. We still have a distance to cover. We're still only about 75% of what our share and distribution is in urban areas. So we still have a distance to cover, but at least the gap is, not widening, but narrowing. The weak state growths are again looking good. Rajasthan continues to grow at 27%, MP at 15%. UP has tracked up from the 9% to 15%, and Gujarat continues to grow at 16%. Even in the other smaller states, we've seen very good growths. So Uttaranchal is growing at almost 30%. Haryana is growing at 17, 18%. Bihar over 20%, and so on and so forth. So the entire Hindi belt is growing at a faster pace than some of the other territories that we have. And this is our weakness as far as share and distribution is concerned. Third is about cost leadership and cost efficiency programs that we run. As I had spoken last time as well, we aimed for the sky and we did reach very close to that. So in 17-18, our total cost efficiency was 4.5 times what it was in 13-14, and that was about 225 crores. And this year we are looking at exceeding that and going much beyond that from a cost efficiency standpoint. Also, our journey on technologically superior factories continues. We've got 2 greenfields which have been commercialized. So we've got a second factory in Guwahati, which has been commercialized and now is producing product for us. And the second one is in the SEZ, which is in Mundra, which has also been commercialized. And again, it's a state-of-the-art factory, which will give us great efficiencies and great cost savings from our supply to the international business. As we do this, we continue to dream, and our dream really is to take Britannia to be a total foods company. And I do think that dream is very, very powerful because there's no other brand like Britannia which can own a lot of spaces within macro snacking and within foods. So we are actively working on new categories and geographies. Croissants is, underway. The project is underway. We are putting up the manufacturing facility in Ranjangaon. We should be ready by October with a launch in November. Our dairy milk collection scale-up is happening as we speak. We will start to put the project together for milk processing, again at Ranjangaon. So that's something, again, which we think is a fairly large move from our side. There are other categories within macro snacking where we would like to, either strengthen our position or to enter as a strong player. So we are looking at, you will see some very, very exciting cake innovations. We've got some technologies which are going to give us extremely differentiated products as far as cake is concerned. Also, towards the end of the year, some very exciting rusk products. But the trick will be to move beyond that to other macro snacking categories. I can't divulge too much of this time till we've finalized our projects. But again, I would say that we are very excited with what we have in the pipeline. The new geography agenda, the fourth country of operations is going to be Nepal. And as we speak, we are looking at other countries as well, in and around India, as well as in Middle East and Africa, where we can start up our operations starting in 2020. So that's where we are at. And as we think of this dream of becoming a total foods company, we do think that we need the right people in the right place to help us build these businesses. Recognizing the realities on the ground is very, very critical. And what are the realities on the ground? So there's a very interesting BCG report which I read, and I just want to quote from that. What it says is that it says large brands are losing share to small and extra small brands, right? Scale, distribution, big media, big brands is not the only differentiator or is not the only ingredient for success. Obviously, e-commerce is disrupting all of that and more. Precision marketing is very important and it costs less. A manufacturing push is good, but it's important to have consumer advocacy rather than just relying on manufacturing push. And it also says that scale is not sufficient. You need to have consumer centricity. You need to make sure that you have consumer engagement models. You embrace complexity and you become agile, as a team and as an organization, right? So I think it's very, very important for us to recognize that, right? We, in a large company, always think of how can we, at one shot, run a line for 5 days and just keep producing one product, which will give us the kind of efficiencies that we want. But I think we have to really start to do a little bit of introspection. And even if life is creating a little bit of complexity for us, I think it's important for us to take that forward. In that view, what we are trying to do is that we are trying to build strategic business units within our business. So overall business, there will be strategic business units. So while we have the scale of a large company, we would like to have the thinking of a startup within these smaller businesses, right? So with that spirit, what we've done is that if you go to the next slide, which is slide 17, which talks about the organization structure. So what we've done is we've created these business units, and as you'll see on the right-hand side of this slide, there are 3 business units that you see. So there is a VP International. So International is one business unit for us. Dairy, which is going to be the largest investment that we make as a business, is the other business unit, and we've recruited a very, very able leader to run that business for us. The gentleman's name is Venkat Shankar. He is here with me. He's worked in many FMCG companies, and he's also done private equity work for almost 9 to 10 years of his life. So he brings a long experience and a very diverse experience to the table. So we are looking forward to his contributions. And we've got, I think I last time spoken about Jayant, who handles bread, cake, rusk, and the bread chip, which is the croissant business. Under Jayant, we also got leaders who will run each one of these subcategories, and each one of those leaders are also highly empowered and will be running these businesses with the agility and the mindset of a smaller company. So I think I'm actually quite happy with the team that we have today, the quality of the team, the thinking as well as execution capability of the team. is of a very, very different order. So very proud of that. Now moving on to the next slide, which shows, where are we going to put up the facilities that we are talking about. So Ranjangaon is going to be a food park for us. It's a very large facility. It's a 150 acres facility that we are putting up, which is going to have biscuit, cake, rusk, croissant, dairy, and some of the other products that we want to do. All of these in one facility. And we are looking at also putting up, the backward integrated facilities in Ranjangaon, which will mean, milk collection, flour mill, and warehousing and raw material storage, which will be technologically superior to what anyone else does or even what we do in our factories. So now with that, moving on to the results. So if you were to look at the results for Q4, we've grown 13% in revenue terms. And, you will also see from the gradient that it's been a journey forward for the last 4 years, which we are very proud of. As we speak about this, the inflation has been under control, so it's not been a year of high inflation. In fact, our overall inflation for the year was about 3%, and that too because of a few commodities. While there's a deflationary trend in flour, sugar, and milk, but there was an inflationary trend in RPO, where the tax went up from some 7.6% odd to 48%. And because of that, there was an inflationary trend as far as palm oil was concerned. There was also other fats. There was an inflationary trend, so we saw that in butter. Also, we saw it in our packaging material. So there were some inflationary trends and some deflationary trends, which got the overall inflation to be at about 3%. Moving on to our bottom line performance. Our bottom line performance has been fairly good. Our accelerated cost efficiencies programs have given us a fair contribution to what we've achieved, and we've also leveraged our fixed costs. So getting to the graph, which is on page 24, you will see that we are now, for the last 2 quarters, we are at an operating profit of about 14%. Getting to the financials, net sales growth of 13%, which is page 26, by the way. So net sales growth of 13%, profit from operations up 29%, profit before tax up 29%, and profit after tax up 25%. And we have also we identified some idle assets which we've had accelerated depreciation in this quarter of about 10 crores, and we've built some reserves for our centenary year, which is approximately 14 crores, which will help us in our bonuses and other rewards that will have to be provided for the centenary year. So with that, if you were to look at the overall results and the progression, which is at the bottom of the chart, you will see that the progression all from profit from operations, from profit before tax, and profit after tax has been fairly good. And just the note at the bottom, profits have been restated from 15-16 onwards to make the numbers comparable. So that's all from me. We can now open the session for questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset mode while asking your question. We would also request participants to limit your question to 2 at a time. Time permitting, you may come back for a follow-up question. Thank you. The first question is from the line of Avnish Roy from Edelweiss. Please go ahead.
Sir, you have done quite well. Congrats on that. My first question is on promotions and offers. So when I see your delightful innovation in Q4, out of the 4 products, 3 have extremely high level of promotions offer, 33% off, 25% free grammage. Also, your 22 bips gross margin seems slightly lower than in our expectation because milk, sugar, wheat prices have been soft. There is inflation, palm oil, etc. So just take us through, has the offers in general in the industry gone up, or is it a drive largely from you?
See, the offers basically are from time to time. It's not like we run offers all the time. So I don't think there's any intensity as far as offers is concerned. But you've got to remember one thing, Avnish, that when the commodity prices are stable, people do tend to promote products a lot more than when they're not stable. But I would not say that it's anything beyond the ordinary.
So my second question is on the cheese business. You have a great brand there, but based on whatever market share data has come, it seems you lost 300 bips market share, and Amul seems to have gained 700 bips volume market share. Now, will the new factory in Ranjangaon help resolve this? Because I think that has been the key issue because outsourcing.
Yeah, so if you were to look at the premium versus Amul, we have a very high premium versus Amul, right? So we are currently at between 27 to 30% premium as far as cheese is concerned versus Amul products. And that, I think, will get sufficiently resolved as we start to produce our own products, because right now there are many heads to share the profit. So I think that will certainly resolve the issue, but that we are still 2 years away from that. So we will have to look at what are the interim ways of making sure that our shares keeps moving in the right direction as far as dairy is concerned.
So one clarification there, in the slide you have mentioned commercial production to start in Q1, and then you are saying it will take 2 years. Why is such a gap?
No, we haven't said commercial production. No, that is not dairy, Nish. That is not dairy that we are talking about. We are talking about the first commercial production to start will be cake. Then after that, followed by biscuits. Dairy is only going to start about 2 years later because the lead time to get the processing facilities ready for dairy is fairly long.
Thank you. I would request Mr. Roy to come back in queue for follow-up question. And also we would request participants to limit your question to 2 at a time. We'll move to our next question, which is from the line of Sameer Gupta from India Infoline. Please go ahead.
Hi, sir. This is Percy Panthaki here. Sir, this quarter, as the results are coming, most of the FMCG companies are calling out a revival in FMCG demand. So just wanted to have your take on it. I mean, and this quarter numbers also of a few of the companies have been on top line higher than estimates. So it does look like there is a sudden change in the demand environment. So are you seeing anything of that sort?
Well, we've seen 2 quarters of double-digit volume growth. It's always good to have, that kind of volume growth because, as I've always been saying, India deserves, as a country, with the kind of, GDP growth that we are seeing, it deserves to see much better growth. So I'm hoping that it continues and the revival does happen. And this being a, election year, hopefully, it will sort of continue for at least a year. And then with a stable government, things should be moving on at the same pace.
Right, sir. Secondly, just a couple of accounting questions I wanted to ask. One is your employee cost on a YOY basis is up quite a lot, over 30% in the standalone. So what is the reason for that? And secondly, if I look at your consol minus standalone accounts, the sales has declined actually for this quarter on a YOY basis, but the margins have inched up sharply. So just wanted to understand for both these things, the story behind the numbers.
So on employee cost, we had reported the last quarter also. There's a 17 crore of provision that we had made on the pension settlement. That was a one-off that happened the last quarter. Similarly,
I'm talking about Q4.
So Q4.
This quarter on a YOY basis, so Q4 this year versus Q4 last year, on a standalone basis, your employee cost is up quite sharply. And even versus the last quarter sequentially, it is up quite a lot.
So basically what we've done is, because this is our centenary year, as I was mentioning in my presentation as well, we built about 14 crores as, celebration / bonus for our centenary year in this quarter.
Understood,
yeah.
Sir.
Yeah.
What was your second question?
So if I just do your consol P&L minus your standalone P&L, the sales is down, but the margins are up very sharply. So both on sales and margins, what is the story behind the numbers?
The subsidiaries are essentially the international entities and dairy business, right? So far as international is concerned, the growths have been better, right, as compared to what it was in the first 3 quarters. And the margins are always better there. In addition, we have also taken some price increase actions for the international subsidiary. So that is one. Second is the focus in dairy has been on value-added products and in which the margins are better, coupled with milk prices being lower.
So basically, as far as dairy is concerned, because we prioritized on cheese, while cheese is up double digits, some of the other commoditized categories are down. So if you were to look at overall volume or revenue, that's below what it was last year, right? And however, at the same time, the margins are up because cheese is now growing while the other commoditized segments are not growing. So the margins are dramatically up versus last year. So that's the reason for what you're asking.
Understood, sir. And could you please allow me one question on dairy, please?
Okay, go ahead.
Okay. So, see, sir, just wanted to understand the thought process and philosophy behind going into the back end of dairy. You are an FMCG company. You are not going to sell pouch milk. You are going to sell value-added products which just use milk as an input. Why do you want to get into this completely different business of procuring milk and putting up plants, etc.? Why don't you concentrate on branding and let the procurement and manufacturing be done by a third party, because you are able to command serious brand premium. And if you just lose out on 2-3% cost benefit by not doing your own manufacturing or procurement, you will more than make up that in your branding initiative. So just wanted to understand the thought process behind this entire initiative.
The thought process is that we want this to be a fully integrated dairy operation. So you've got to remember that we consume a lot of dairy for our biscuit business, right? So the total quantum of dairy that we consume is about 350 crores, right? So, and basically what we consume are byproducts of what we would produce if we were making cheese in our factory, right? So whey product is output out of cheese. Even SMP, has to be the milk balancing tool that we have in the factory. Even ghee is something that comes out of, the milk processing because of the fat that you generate. So basically, it just makes the entire thing end-to-end consolidated operation. And frankly, that gives us a great amount of leverage from a pricing standpoint because, if you have a co-packer, I'm not saying that we're going to walk out of co-packers, right? So we will certainly still have co-packers. So if you were to look at biscuits, 20 years back we used to have zero in-house production or very little in-house production. From there we went to 30%, now we've gone to 50%. So similarly, the journey here is also going to be similar. But one, it's going to be a fully integrated operation. Two, we're going to use the right technologies and make sure that it's more efficient than anyone else in the country. Three, we are going to create a portfolio of products which are certainly superior, but also from a format standpoint are exciting for the Indian consumer and hence create these categories within India. So we have very ambitious plans, and dairy, as you know, is a very, very large category with very, very positive connotations as far as health is concerned. So we would certainly want to be a large player in this category.
Right, sir. Thanks and all the best.
Thank you.
Thank you. Reminder to all our participants, please restrict your question to two at a time. The next question is from the line of Arnav Mitra from Credit Suisse. Please go ahead.
Yeah, hi team. Congratulations on a good set of numbers. First question was on the input cost. You said that there's about a 3% blended average increase. So just wanted to understand this reduction in milk and sugar which has happened, which seems quite sharp. Has it started fully reflecting in your consumption prices, or that full reflection will happen going ahead? And in that context, do you see this 3% number actually tick up or tick down as you kind of move into FY19?
So it's seemingly stable right now. It's actually starting to reflect. Last quarter, we certainly were reflecting, the deflationary trends as far as, milk and sugar and flour was concerned. And I think it is looking like it's going to be stable at least for the first 2 quarters of this year. So I see no big change as far as commodities is concerned.
Sure. Thanks for that. And second question on the growth. While your growth has definitely ticked up in the second half, I think the 24-month growth that you give are still below, let's say, the pre-demonetization levels when you were running in the 20s, mid-20s or so. So as the low base of demon and GST, that period goes away, do you see you being able to go back into those kind of 2-year growths? What I mean to say is that it would require some kind of a pickup from these levels, or this level of demand you think can take it up to those levels?
Well, I am hoping that we will be able to maintain our numbers. So if you were to look at it from Q4 of last year, which was a 24-month growth of 12%, went up to 15 to 19. So we are, moving towards the pre-demon numbers of 22, 25, and hopefully even 26 and 30. So I'm pretty hopeful that things will move in the right direction from now onwards.
Okay, thanks so much. All the best.
Thank you.
Thank you. The next question is from the line of Aditya Suman from Goldman Sachs. Please go ahead.
Yeah, hi. Good evening. First questions, again, on dairy. Can you, you talked about SMP and whey, and would these also be obviously products that you look at for the dairy, in your dairy plan?
So we are looking at a dryer which will be able to dry whey as well as SMP. So it's a common facility for both. And, as you know that you need to have some milk balancing in your dairy facility. So that milk balancing will happen through SMP. And we do consume SMP in our biscuit operations. So depending, on what is our production cost and what is the market cost, we will certainly be making sure that we produce enough to be able to use it in our biscuit production.
Understand. So just a follow-up on that. So this is this will basically be for balancing the entire portfolio, but you'll also have a primary sort of value-added business on the dairy?
Yeah, so see, predominantly the dryer facility will be for whey powder, but whatever is the balancing number for milk will be used for SMP.
I understand. And on your, secondly, on your accounting, in terms of, we've seen the investments go up quite meaningfully on the balance sheet. Can you explain what that is?
Yeah.
So the CapEx for the current year has been 375 crores. So that's the investment that has happened during the current year.
All right. Yeah.
And it's basically a bulk of that is in manufacturing facilities and technologically superior and new technology for India kind of lines that we brought in for biscuits as well as for cakes.
I understand. Yeah. But I also meant the investments, as in there's investments in your current investments line that has also shot off quite a lot.
The current investment going up is to do with the treasury investments. So, the overall treasury investment has moved up by almost about 750 crore versus the last year.
Okay, and so this is largely in liquid. This would largely be in liquid fund and stuff like that.
Correct.
I understand. Thanks a lot for the clarification.
Thank you. The next question is from the line of Lalita Chopra from JP Morgan. Please go ahead.
Yeah, hi everyone. This is Latika here. The first question was, on margins. You mentioned that FY19 is going to be quite a heavy year on new product launches. Would these products incrementally be gross margin accretive? And also, assuming that the brand investments will scale up to support these, would you still expect the overall margins to improve in a considerable manner, considering we've seen almost close to 100 basis points kind of improvement in FY18 in your operating margins?
So, Latika, first of all, we don't give an outlook, but we've got a very clear protocol. So we've got a stage gate process. We've also got a innovation process, which is very clearly spelled out. So, if there is an extend product, which is an extension of a brand, we clearly need to we have a clear protocol on how much investment can go into it, what kind of margins do we generate out of it. If it's a, new to the market product, what kind of investment needs to go, what kind of margin should it be there. And all of these have to be accretive to our current products, right? So innovation, there's nothing which is going to be dilutive to our current products. So with that, we do think that we will be able to, have enough funds to develop and support these products.
All right. And the second question was on product mix. Could you share how does your biscuit sales stack up now in terms of premium, popular, and mass segments? And how would you expect this mix to change over next 3 to 5 years? And does this imply that there is an opportunity both at, realization improvement and margin improvement going forward just for the biscuits category?
Yeah, so actually if you look at, contribution from the value part of the portfolio, it's only dropped. And it's dropped quite a bit. What has been really growing for us is the premium part of the portfolio, and hopefully that trend will continue.
Any numbers you could share, Varun, on what's the share of premium today?
Premium today would be, what is the premium number? Ali?
85% of our business is
Speak up. So this is Ali, Head of Marketing.
So almost 85% of our business is from non-value products, which are in the core and premium segment. And as Varun said, that's the segment that has been growing faster than the value segment for us. And that's why that's how we are premiumizing our portfolio. And that's the trend that we expect to continue.
All right. Thank you.
Thanks.
Thank you. The next question from the line of Kunal Jagda from Qtr4 Shares and Securities. Please go ahead. Kunal, your line is in the talk mode. Can you please go ahead with your question?
Thank you, sir, for giving me the opportunity. Sir, you just mentioned that you are starting an operation in Nepal. So I just want to know that would be through JV or acquisition, or you would be doing independently?
No, we are going ahead independently.
Okay. And what would the capex for Ranjangaon?
The total capex for Ranjangaon, and that's a 3-year capex, will be 1,000 crores. In the first year will be around 350 crores, and then we'll scale up towards 1,000 crores. And that's something which is our commitment to the Maharashtra government, basis which we've got the requisite incentives.
And what would be the utilization level in this facility?
Our utilization levels are always in the 90s. So we will put it in such a way that our utilization gets very quickly ramps up to over 90%.
And what would be the asset turns, sir, for this plant?
Asset turns.
So, what is asset turns?
What would be asset turn for Ranjangaon? Asset turn
about 4 times. It will be 4 times roughly.
Oh, okay. Okay, sir. Okay, sir. That's it from us. Thank you.
Thank you.
Thank you. The next question is from the line of Mike Sell from Equity. Please go ahead.
Thank you. Please could you update us with the level of inter-corporate deposits at the end of the year, please?
Yeah. So, ICD to the group companies, I hope you are referring to the group company. ICD at March 18 was 350 crores versus 450 crores the last year, March.
And do you have plans to reduce these to zero in the coming years?
It's been coming down. Over the last couple of years, it's come down. We have no such plan at the moment, but then it's been progressively coming down.
Thank you.
Thank you. The next question from the line of Dipankar Sati from Marga Capital. Please go ahead.
Sir, I want to know about croissant business. So, what kind of growth you've seen there, and what we can expect from that business?
So, that's my favorite project, by the way. I think it's a project with, there's a lot of excitement in that project because of 2 or 3 things. One is the product itself is delightful. It's on the go. It's aimed at the young people. It's any time of the day. Again, I feel like I'm sort of repeating myself, but I think it's a very, very exciting product, which is also reasonably filling compared to other macro snack products. So, we've seen that anything that is center-filled in India is a very, very exciting product. Whether it's a center-filled biscuit or cake or whatever, our experiences have been that center-filled, which brings in solid with liquid, is very exciting for the Indian palate. So, the second thing about that project is that it's not a low capex project that, we will see a lot of people coming in with investments to put it in there, because it's a fairly complex line. It's not an easy product to make. So I think once we get in there, we will be able to dominate that space. While, there is an Italian company called Bauli, which is already launched and is doing reasonably well. But with our scale, with our distribution, with, the kind of facilities we have, I think we'll be able to dominate that space. So I'm really looking forward to that. And, I hope that, my team will make me proud on that, because I genuinely hope that we will be able to finish up that capacity very quickly, and we'll be putting up more lines for that product as we go forward.
Yeah. Thank you, sir. That was from my side. Thank you.
Thank you. The next question from the line of Nandan Varpak from Wealth Managers. Please go ahead.
Hello.
Yeah, Nandan.
Yeah, good afternoon, sir. So my very small question is about dairy segment. So what would be our distribution reach in dairy segment?
Current distribution reach is a fraction of what it is for biscuits. So, Venkat, how many outlets do we get to?
Total about 1 lakh.
So we get to about 100,000 outlets compared to biscuits, which is 5 million outlets. So a long way to go. But we also don't want to spread ourselves thin because we are a very premium player today. But tomorrow, with our own facilities, with low unit price points, with the right kind of products, we would like this distribution to go up dramatically.
Okay, thank you.
Yeah.
Thank you. The next question is from the line of Prasad Deshmukh from Bank of America. Please go ahead.
Congrats on very good execution. Two questions. Firstly, on Nepal, as to would it be possible to put a number to the size of this opportunity? What products you would be pushing at least in the first year, and margin profile?
So the margins, so let me just close out on the margins. So currently we are exporting from India, and we make reasonable margins, right? If you were to look at, the margins with local facility, they will be accretive to what our margins in India are, right? So that is the first point. Second, from a facility standpoint, the investment in the facility is not very large. We're looking at some 55 crores of investment from a capital standpoint. And with that, we hope to generate 60 to 70 crores for starters and scale that up to almost 150 crores in the next 3 to 4 years. The kind of products are going to be exactly what we do in India. So it's going to be Good Day, it's going to be, all of our regular products.
Okay. Second question on your vendor consolidation. I think post GST, you had said that the main one of the drivers of your efficiency would be vendor consolidation. So has that already started reflecting in the numbers, or is it yet to happen?
No, we have not done any vendor consolidation. We have done the working. We have found that transportation happens to be a very key component of supplies by the vendor. And with about 70 factories across the country, it's important for us to have vendors in the local area. Having said that, there are commodities and products where consolidation has happened.
Okay. Thanks.
Thank you. The next question is from the line of Hemant Agarwal from Devansh Traders and Analysts. Please go ahead.
Hello, sir. Good afternoon. Acknowledge my heartiest greetings to you on the completion of 100 years as a corporate. So I have two specific queries regarding the results that you have posted this quarter. Sir, if I look into your results for the quarter, your purchase of traded goods has shot up quite significantly. So from a number of 301 crores last quarter, it has shot up to some 618 odd crores. So is that attributable to some change in operational model that we are envisaging, or was this attributable to?
Yeah. So essentially, there has been some change in the method of buying, right? In some places, we used to supply the basic raw material and convert it into finished product. In some places, post the GST, some of the product types, such as bread, it was better to do the other way, which is to buy the finished product. Ask them to buy the material and then supply. That is one. The second is, some of the factories also went through this transformation. So it doesn't really matter. I think both lines have to be read together.
Okay, so the question was because your gross margin, because of that, if we add up all the material consumption, which will be your CMC, that is cost of material consumed, purchase, stock in trade, and change in inventory, that would have led to a decline in your gross margin percentage. So if we add up all this as a percentage of GTO, it will total out to be somewhere around 36.8 versus 37.7 of your last quarter. That is what my concern was.
Which is what Varun explained, saying that there was an increase in the rate of RPO, the customs duty on palm oil, went up from about 7.5% mid-quarter September 17 to about 48% in March. So the RPO rates went up significantly, and that impacted this 0.7% that you're talking about, largely.
That, I guess, sir, should have been offset by the softening of the oil rates and flattish trend of maida rates as well, I guess.
No, maida rates start coming down from April because the crop season is end March, beginning April. So maida rates, if anything, will be the highest in Q4.
Okay. Sir, one more query, if you could allow me. Sir, you have also reported a 50% odd percentage growth in the other income. So if I add up the other operating revenues and other income for Britannia, it will total to some 71 odd crores for the quarter versus 45 odd crores that we reported in the last quarter. So what is that attributable to? Is this the recognition of fiscal incentives in the commercialization of your new facilities that you have actually entered into?
Yeah, you're right. This is recognition of fiscal incentive in the state where they have announced the fiscal incentive under the GST regime, which is Karnataka.
So this is Karnataka.
Karnataka. Yeah, from July, we had stopped recognizing fiscal incentives because under the GST regime, it was not announced in most of the states. So Karnataka announced in the month of March, and therefore, for the period from July to March, it's been recognized. But if you look at the year as a whole, you still see that it is lower.
Yeah, correct. Agreed. I was talking about QOQ.
Yeah, so states like Bihar, Orissa, etc., they have still not announced. And therefore, year as a whole, you won't see that going up. And so far as other income is concerned, it is to do with the treasury investments and, the volume of the treasury investments primarily.
Okay, sir. Thank you. Thank you so much.
Thank you. The next question is from the line of Amnish Agarwal from Prabhudas Lilladher. Please go ahead.
Yeah, hi, sir. A couple of questions from my side. We have been targeting cost efficiency program year after year. Like last year, we had a target of 250 crores and we achieved 225 crores. Now this year, again, we are targeting higher amounts from the cost efficiency program. So can you throw some light on it? What could be the quantum of cost efficiency programs in the current year? And are there any additional heads under which the cost efficiency programs which will now cover?
No, it continues to be the same heads. The quantum that we are looking at is a little more realistic. So we are looking at 240 crores and we are fairly confident that we'll get to that number. We've started on the projects a few months back. In fact, what we do is we start on the projects midway into the previous year. And then we work towards accomplishing those in the next year. So that's what we did in the previous financial year, and hopefully we'll be able to get to our number this year.
Okay, sir. My second question is again on the input cost inflation, that if I look at the kind of, say, if I break up your raw material cost and the 4Q numbers which you have given for deflation in 3 commodities and increase in RPO, then actually, as per my calculation, there should have been a deflation of 2 to 3% rather than inflation. So are there other commodities than the 4 mentioned in your presentation where the inflation has been disproportionately high? And given the fact that sugar prices are at a multi-year low, even flour is flattish, so are we in any way going to have some deflation as we move down towards the rest of the FY19 now?
So, the cardboard boxes, butter I told you, palm oil, cashew, nuts, those are the areas which we've seen inflation in. I was also, when I looked at these numbers, I said that, if this is what the deflationary trend is, then it doesn't look like a 3% inflation. But when you rack up the numbers, you see that there has been an overall inflation of 3%, which is primarily driven by RPO, but contributed in small quantum by, the other areas that I spoke about. And as we go forward, hopefully the prices should be flattish, but the thing is that we are again now cycling the lower numbers of last year. So there will be a slight amount of inflation as we go forward, but it's going to be very, very controllable.
Okay, sir. Thanks a lot.
Okay.
Thank you. The next question is from the line of Kunal Bhatia from Dalal & Broacha. Please go ahead.
Yes, sir. Thanks for the opportunity. Sir, I just had one question in terms of, you mentioned the capex in the current year was about 375 crores. So just wanted to know how much was it for the Ranjangaon plant. And secondly, also wanted to know, post the investment in the Ranjangaon plant of 1,000 crores, what kind of outsource production are we looking at that point in time vis-a-vis, and also if you could give what's the current status?
So the outsourced production, so you've got to remember that if we are growing volumes in double digits, we require about 100,000 tons of extra capacity every year. So the overall outsourced number is not going to go down dramatically. It will be, the own factories would get to about 60% and outsourced will get to about 40%. The Ranjangaon investment in last year was about 170 crores out of the 350 odd that we spoke. 375. So out of 375, 170 was in Ranjangaon.
Okay. And so,
hello?
So we seem to have lost his line. So we'll take one last question from the line of H. Choksi from Qtr4 Shares and Securities. Please go ahead.
Yeah, hi. Thank you for the opportunity and congratulations to the entire team for the centenary year and the fantastic results. My question is to Varun and the entire team. So Varun, basically, I have been a big fan of this company. But more importantly, your vision for this company has been fantastic. Can you please throw some light on the breakfast segment which we are targeting to grow in future? Because I really believe that to become a complete food company, you need to get into the breakfast segment big time to display your potential. And my second question is from the HoReCa segment for cheese. We have seen big competition in the hospitality, restaurant and catering for cheese from Go and Amul, especially Go, which has a large fair amount of SKUs in this space. I want to understand from this company as to how bullish are we and how aggressive are we to put ourselves, because I think the B2B segment is showing distinct signs of improvement with the per capita consumption going up. So I would like to have a little sight on that and a little follow-up question maybe, but a little later on. But thanks for that. Yeah.
Okay. So breakfast, I do agree with you. I think the breakfast space in India is very large, but it's a very, very difficult space to get into because, everyone wants to have hot breakfast rather than have cold breakfast. So, no one has really been able to come up with a product which meets the requirements of a housewife from a hot breakfast standpoint, because housewives want to add value and also want to create their own recipes as far as breakfast is concerned. But I'm not saying that we are not looking at it. We certainly will look at it, and I think it's going to be, whoever cracks this will get a big bonanza out of this. What we are doing is we are, at this point in time, putting this as priority 3, because, it's not that we are not working on it. We are working on existing categories. We are looking at what are the existing breakfast categories that we can enter and what are the right to succeed that we have in those categories. But I think the big move forward is going to be on creating certain breakfast categories which fulfill the requirements of an Indian housewife. Right? But from our current portfolio standpoint, we are looking at breakfast biscuits. We are looking at some other breakfast snacking categories. I think Chipita is also a potential breakfast product because it certainly can be a breakfast on the go. And we are also looking at, other categories within the current breakfast space which we are not currently in, to see what is our right to succeed in that segment. Your second question was on cheese. In the infrastructure that we have today, it's very difficult for us to compete with a manufacturer of cheese as far as the B2B business is concerned.
Right.
You're absolutely right. It's the fast food companies which are creating the cheese market in India. They are getting people to try out cheese and like it and stay with it. So hence it makes sense to have a B2B component to our cheese business. But as I told you, we have many heads to feed. We've got contract packers with fairly high fixed costs, etc. So it's very difficult for us to compete in that segment, and if we do compete, the margins are very low. So we used to do it, and we've almost come out of it because it was not giving us the requisite margins. But as we start to do our own business, at that stage, we will look at it very, very seriously. As we keep our back end, get our back end into place, then we will start to look at it very seriously.
All right. I think that's a fantastic suggestion, and I would really be happy if we can implement it, because we are seeing distinct amount of revival in this segment, and considering the back-end integration which we are doing, I don't think it will be difficult, because if you look at Manchar and Ranjangaon, both these belts are big milk producing belts. So,
absolutely. That's why we chose Ranjangaon as our facility.
Right. All right. Thank you for the opportunity and all the best for the year.
Thank you.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I now hand the conference over to Mr. Piyush Bhandari for closing comments.
Thanks everyone for spending time with us on the call. We look forward to interacting with you again. Thank you.